Well, in better news, this week a Nobel Prize was given to two scientists whose groundbreaking research into curing cancer was the first to look at how the immune system, rather than, say, chemo, radio or surgery, could play a role. Then today, we've been told that thanks to Professor Ian Fraser, Australia could soon be the first country in the world to be cervical cancer free. Now, wouldn't that be an amazing thing? Well, these are extraordinary achievements, aren't they? So it's heartening to see that biotech as a sector looks to be on the rise too. It's been a pretty patchy one, frankly, to be involved in for as long as I've been covering them. Now, one of the most successful biotech entrepreneurs in the world, I reckon, is Paul Hopper. He's been based here, but he's been the founder, chairman or CEO of biotechs in the US, in Australia and in Asia, including a cancer drug developer, Viralytics, which he sold recently. And I'm delighted to say Paul Hopper joins me at the desk. Paul, welcome.
Thank you.
Tell us about the Viralytics story, because it is what you call your highlight, isn't it? It started, as a $4 million company, not in very good shape.
Correct. So this is a technology that was invented by Professor Darren Shafran at the University of Newcastle here in New South Wales, so it's homegrown. And many years ago, he noticed that when you give a particular virus, that is a virus associated with the common cold, to cancer patients, that it seemed to kill the cancer cells but left the healthy cells alone. And about 9 or 10 years ago, I was called by one of the shareholders in this company to give them a hand. It was in trouble, as you say. It was worth about $4 or so million, and it was broke, so I became the chairman.
You turned it around and flipped it for $500 million to Merck the other day.
Well, I didn't, but the management team, so we sold it to Merck for $502 million.
How did that happen? How did it become such, I mean, what were the stages that...
Well, so 10 years ago, the idea of injecting a patient with a virus to cure cancer was pretty out there.
Yeah.
And I remember in those days going around and seeing the institutional funds saying, would you like to invest? And they said, oh, well, it sort of sounds interesting, but come back when you have a little bit more data, because in the biotech game, it's all about the data. Does the drug produce the data that you're looking for? And as the years went by, it actually performed. This virus did what we thought it was going to do. And so we got a lot of support, and we got to a point where Merck, one of the biggest pharma companies in the world, said, we have to own that. And they made an offer and we sold it.
How's the sector going here in Australia? I mean, what have been the good things and what are still the challenges?
Look, it's the first thing you have to remember, that in Australia, biotech is not an established asset class. So we're still raising the awareness here. Look, it's good and bad. The bad side would be maybe the news yesterday that Bionomics failed their clinical trial and the stock went from 50 cents to 17 cents. The good news would be that Certex was sold for $1.9 billion a month or so ago.
Extraordinary.
So it's mixed. But we have a flourishing industry here. We have good science, as evidenced by Viralytics. And it's a sector, I think, that's worth being in.
Patient capital.
Very patient capital. I mean, the development of a drug is a 10-plus year investment.
I mean, I was talking earlier to Mark Carnegie about the $2.7 trillion of super that we do have here. I mean, is the biotech sector a good place for some of that?
In my experience, they're totally deaf to biotech. I lived in the States for many years, and I would come out here and I'd go and see the super funds, and they had very little interest in it.
Why? Too risky for them?
Too risky for them.
Do you think that might change?
I hope so.
There's so much money. You think that there would be a proportion on the risk-reward fund that would be able to?
I mean, in America, pension funds invest heavily in the life science sector. It is an established asset class. There's thousands of analysts that cover the stocks. There's hundreds and hundreds of biotech funds that invest in it. So, look, 5 years ago, there wasn't a great deal of foreign investment in terms of life science funds in Australia. At Viralytics, we had OrbiMed, one of the biggest life science funds in the world. We had Abingworth in London. We had Cormorant Baker Brothers. So there is definitely a
And what about the national interest once some of these blockbusters take off, you know, blockbuster ideas, I mean, rather than drugs? Do we actually tend to retain it here in Australia and the value? Or are we still suffering from being bought out and patented out?
Well, I guess I have to be frank and say the two examples I just gave you, Viralytics and Certex, one's gone to China and one's gone to America. Look, I think most people that work in the biotech life science industry have a slightly more global view on it.
Yep.
I mean, it sounds very patriotic that, you know, you invent a drug and you keep it here,
yes.
but the development of a drug is a massive enterprise requiring billions of dollars.
Like I say, we've got all this money here.
But they're not investing it.
They're not investing in it. You've got a point about boards as well on a lot of these biotechs.
Yes, I think after the quality and the scientific merits of a drug,
yes.
the people that are going to run it are absolutely fundamental to the success. So in Viralytics we had Malcolm McColl, who was a CEO, an outstanding CEO. We had Darren Shaffer, the professor. My concern with a lot of boards and managers in Australia is they don't have the domain experience in biotech, particularly the boards. So there's a lot of board directors who are sitting there who, in my opinion, have no business being there.
And do you have a view on whether a lot of these biotechs should be public or private?
Well, because the venture industry here for biotech is relatively small, everybody tends to go public early. So in the States you do a Series A funding and a B and a C maybe, and then you might think about an IPO.
Is that one reason why there might be sort of more sort of reluctance to invest so early in the cycle?
Yes, because a lot of the companies that go public or they do a reverse merger, they raise small amounts of money, they run out, and then they have to go back to the market, and if they haven't done what they said they were going to do, the next raise is lower, and so people are put off by that.
So finally, what are you excited by about at the moment?
I'm excited about a number of the companies I'm involved in, which you would expect me to say. Imugene is an interesting company.
Did it get its raising away?
It did. We had a very large raising for that. And you mentioned about the two scientists who won the Nobel Prize, Jim Allison, who I had the privilege of working with a few years ago. He's in the area of immuno-oncology, which is basically using your own immune system to kill the cancer. Remember, in the old days we'd zap it with radiation or poison it with chemo or cut it out. And what he was one of the pioneers was he worked out that you could take the brake off the immune system so the immune system recognised the cancer as being foreign.
And do you think there are a lot of companies that might crop up in this area?
There is a land grab. My company, Imugene, for example, is in that area. It's the area I would be looking at. It's the hottest area in cancer drugs today.
Goodness me, it's a great space. Paul Hopper, thank you very much for coming in and explaining.
Thank you for having me.